All right, hope everyone's doing well. So this is going to be a video covering a number of topics from studying Al to just a few things about just a few quick market analysis. First and foremost, I do not know why my mouse is not working. It's frustrating, but quite frankly, I don't feel like trying to figure out at this second why it's doing it. Because honestly, I don't really know, and I feel like it's going to take some time. So, in the solution to this issue is I'm just going to be a little more specific. If I say this bar, as in bar, and I'm referring to bar 1 right here, I will actually, because I know you can see both crosshairs, just not the mouse, so where both lines intersect, I will use that to discuss a particular bar. So, for example, January 10th, I'm going to say bar 3, and I'll just kind of maybe do that real quick to get to describe the bar I'm talking about. And it'll be a little slower, but at least everybody will be on the same page. So first and foremost, I was recently asked about a few lines I have. This line right here, and ignore the data window when I put the cursors on. And then I was this line right here, the smaller one, followed by this line. And again, please refer to where both the horizontal and vertical lines intersect as what I'm referencing to, because that's the only way I can really reference without my mouse. So this line down here, the broader one, is a 20-period exponential moving average. Well, first let's talk about the obvious one, this more defined, thicker bar. This is a 20-period exponential moving average. All I really know is it measures the past 20 bars. I don't know the full details about what an exponential moving average is, but other than the simple fact it measures the average of the past 20 closes. That's all I really care about. If you want to know more, Google exponential moving average, and you can find out more. So this is a 5-minute chart. This represents the average price or exponential moving average of the past 20 bars. And please correct me if anyways, I don't even want to go there. This broader line down here is a representation of a 60-minute chart, 20-period exponential moving average. So meaning, I believe the input on this is I took an exponential moving average and plotted at 221, which gives me roughly at the close of bar 1, it gives me roughly a moving average of 56. So if I went to a 60-minute chart and I paid attention to bar 1 on the 10th, which would be over here. Really, I need to look at bar 12. Bear with me. I want to do this right because the moving average moves quite a bit on the open. Bar 12, the moving average right here is 56.03, so basically the same price. If I go to a 60-minute chart, and this may be off, I just kind of had to guess on the numbers, it's 56.19. So in other words, it's about, I'd have to play with the number. I don't really remember exactly what the number is, but it's about 18 cents shy of what the 60-minute 20-period moving average is. So in other words, all it does is it basically tells me we're near the moving average on the 60-minute chart. This over here, we're near the moving average on the 15-minute chart. If I go to a 15-minute chart, and by the way, this represents the 60-minute moving average. It represents the 20-period moving average on the 60-minute chart. So it's 221, and this dotted line, I believe, is 56. Again, if you want to check it, it's really easy. Input some numbers, compare it to a 15-minute chart. Next, someone asked me, they asked basically that I appear to make, I'll read it to you real quick, but And I'm not saying this to harple in this person's question, but I do genuinely want to give my honest opinion. They asked, I don't know if they were saying, I guess they're assuming that I appear to make Al Brooks' stuff look easy. Well, I think I have an understanding of what Al's talking about. I can assure you I'm no expert at this moment. I do feel very strongly in my understanding of it. There's no easy way to make Al Brooks' information easy to learn. It's as much of a tongue twister as that kind of is. There's probably a better way for me to state that. At the end of the day, it's hard. All of this stuff is hard. That is why Al says in the beginning of the course, he could teach all the information he wants. And I will refer back to Al's book where he talked about you can learn how to play the violin, and just because you know how to play it doesn't mean you'll fill an entire music hall and have people pay you. Or as I like to say, just because you know how to play football doesn't mean you'll make it to the NFL. You have to be really good at this. And that is why I've watched Al long enough to see many, many people who I presume just quit. I could be totally wrong, but if I had to guess, they quit. They would always post on Al's websites, and the ones that I knew quit were the ones that always complained. They complained about everything and stating how Al isn't helpful, he's too difficult, he's too confusing, he's too contradicting. Well, if you refer back, 90% of the time the market's confusing. 90% of the time the market's 40%, 60%. 10% of the time the market's 90% clarity. And don't try and rewind what I just said. And if you don't understand what I meant, you'll understand it in time. For those of you that do, you get what I'm talking about. At the end of the day, it's difficult. And what I noticed was the people that were truly quiet on Al's website gave their input here and there. I think they're the most profitable. I think they learned it the quickest. And the reality is this. The person that just gets Al's course and just studies and learns every bit of information will be a lot profitable, much, much faster than everybody else. I fully believe it. Don't reinvent the wheel. Everybody wants some simple method to figure all this out. And, if you find it, let me know. But because you're not going to find it. So it's hard. Let me just glance at my phone I believe I have Al's website pulled up right here. One of the things I like to do is listen to Al on my phone. My advice, get you a pair of AirPods if you have an iPhone. It's worth the investment. Stick one in your ear, and everywhere you go, listen to a video. Al Brooks, I guess this would be the 2017 video course. 121 videos in the fundamentals, 57 hours and 56 minutes in the fundamental video course. In the how to trade video course, 72 videos, 138 hours, 31 minutes. So just since we're all here, why not? Let's pull that in a calculator and just kind of guess. So I said 38 hours plus, just so I can remember the numbers, plus 57, 96 hours if you include the total minutes. So you have 96 hours and 72 plus 121, almost 200 videos spreading over 96 hours. So ask yourself, just try and grasp 96 hours. That's 4 days of non-stop audio time. 4 days. That doesn't include, that's just assuming you're watching only the How to Trade non-Forex course. If you include the Forex course, that's probably another 96, I would say 96 plus 30. I'll just say 30 just to keep it simple. So that's 126 hours. I mean, just grasp how much time that is. So many people want to learn all this, but they don't want to put the time in to watch the videos. And yeah, I mean, I don't have a lot to say with how do you make ALS easier to learn. Well, how do you make anything easier to learn? How do you make algebra easy to learn? You study it. I mean, it's not that hard. It's not that hard of a concept. Everybody knows if you study something, you'll get better at it. The hard part is studying. I'm not perfect with that, and if I could go back in time, I would tell my younger self to only watch ALS videos and not trade one bit. I would, because through trial and error and through being very, very stubborn, over time I have learned constantly, time and time again, sometimes just studying is the better route. So, Al talked about spending 10 years putting in, 10 plus hour days of just studying, let alone the, other however many years he spent maybe before that. So either way, it's hard. You got to study. If you don't want to study, don't do this. I was referring back to some of Al's books, primarily the trend book, and it was interesting in the sense of he all the time mentions don't treat this as a hobby. You've got to get serious about this. And for some of y'all, maybe y'all need to read part of his introduction to his books just to really get a grasp of how difficult this game you're trying to play is. So that's all I'll say with that. At the end of the day, the more you study, the better you'll get. So let's look at a few things. Just for fun. Why not? So first and foremost, here's January 10th. I guess, yeah, it's today. I'm almost forgetting when the days are. So January 10th, you can see we opened just above the moving average. We'll probably have to go below it. One thing to note with moving averages is very often, even on a 20-period moving average of the 5-minute chart, you have to go a little below it. So you're going to go below the 60-minute moving average. Think about it. Are you really going to, on bar one, think about what the market's asking you to do. You're selling at the moving average bar one. Not a wise choice. 20% chance that bar one is the actual, is the actual high of the day. But it's an okay short. Not great short though, really. So then you get 2 legs down to around here, bar 6. Bar 6, reasonable buy, but it's a micro channel. First look probably will fail. And you can see traders sold above bar 6, scaled in, scalped out. So 5 consecutive bull bars to 910. Probably buyers below, probably going above this high. Here we formed a double, probably going above this high. Here we formed a double top at 915, which is this bar. And we knew that we were either going to get a measured move down. Whoops. We knew we were going to get either a measured move down or a measured move up. In this case, we got the measured move down, but we could have easily gotten the measured move up. which is what we did. So clearly always in long on this bar, 925, 930, even more always in long. Probably getting, probably going to go up some sort of measured move. First reversal down should fail. No reason to you can get out of longs here. It's parabolic. First push, second push, third push. But minor, maybe if you get out here, you buy again over here. Again, minor means scalp. Risk is big. You may get a 50% pullback, which clearly you did down to here. And then bears started making money above bars. So we're starting in our trading range. What you don't know is this, you don't know if this was just a buy vacuum test of this area over here, which in hindsight it kind of was. Sharp sell off, and whenever you get these bars, just as when you get here, you're going higher. Same thing here. You're going lower. But what you don't know is this what you have to realize is it's probably a sell vacuum. It's probably bulls somewhere over here just not buying. And what are they doing? Well, they're lowering their bids. They're just not buying. So if they say, we'll probably fall down to here, instead of buying up here, we'll probably fall down to here. I'm just not going to buy. So what happens? Well, think about the logic. Bears start selling aggressively, which means the market has to fall faster to find buyers. Remember, the market's trying to find buyers and sellers. So if nobody's willing to buy, what does the market have to do? It's got to race down to an area where people will buy. Why did we fall from here to here? Well, because nobody was willing to buy. Therefore, nobody's willing to buy. More people are willing to sell, and we're going to go lower. An easier way to state that, if you want to keep it really simple, more traders are willing to sell. Therefore, we had to go lower to a place where bulls would overwhelm the bears. First reversal up should fail, and it did. Bulls bought, probably making money. Again, possible higher low, so could just be some sort of broad channel, like so. And, there you go. So clearly back to always in long, probably going higher, but you're near this area. So again, what's going to happen? Well, first reversal down should fail. That is correct, but it's also an expanding triangle. So I'm trying to draw the lines just to be more specific just because of my mouse. Not really great shape, but again, it doesn't really matter. You can call it a head and shoulders top, left shoulder, head. Whoops, you can call it a head and shoulders top, left shoulder here, head here, right shoulder. Doesn't matter. It's an expanding triangle top. Think about the logic. Bears sold up here. Bears will sell up here. Bears are going to sell again up here. And that's what happened. Probably major reversal down here. So, bulls will probably buy a 50% pullback, which they did. And you can see we just kind of drifted up higher and higher. This looks, it's climactic. It's, there's not impressive bull bars, which makes me think we're not going to break, much higher, but it's fairly tight channel. So yeah, I don't really want to review any more days right now for the primary reason I really want people to understand that this is difficult, and the reality is you have to study flat out. There's no easy way about it. There's no, it's just, you have to. So if you're not studying, start studying. Maybe you need to get Al's video course and start studying it. I can tell you right now, the videos are a lot easier to digest than 537,000 words that Al typed into 3 books. Grasp. Think about that for a minute. Think about 530 something thousand words. Each of Al's books is probably, I'll be generous, and I know it's more than this, but I'll just say 450 words. So if I do the math, 450 words, it's what, 1,400, 13-ish, 1,300 pages. Imagine writing 1,300 pages, detailed pages, over trading. It's a lot of information. So just grasp that for a second. Let's go back to the video course. Could you right now make a 96+ hour video course over trading? 96 hours. Again, mind you, that's basically talk nonstop for 4 days straight over trading. I mean, I don't think people wrap their head fully around that, and they need to, because it's difficult. So that's all I want to say with this. Everybody, if you're looking for a handout with this, you're not going to get it. So either quit or keep progressing and keep learning. The one thing I can tell you is this: the more I study, the easier this seems to get. The less I study, the harder it seems to get. I kind of think of it as, to me, it's a lot like working out. If anyone's listening out there that they like to work out, or they like to run or lift weights, think back to a time when you stopped running for a year, and you tried to run a mile, and you failed. It was hard. But the more you did it, easier it became to run. Eventually, next thing you know, you're running 10 miles fairly easily and not really having any trouble with it. And you're thinking back, how in the world was 1 mile difficult? That's how I see trading. The more you study it, the easier it gets. Now, with that said of studying, there's efficient studying, and for lack of better words, not efficient studying. Don't get me wrong. I think it's great to look at charts, but at the end of the day, I can go back to the dawn of time and read these charts and say, oh, and try to figure out every single bar. But here's the thing: don't reinvent the wheel. Al's got a video over this. Al's got a video over this. Al's got a video over this. And guess what? He's even got a video over this right here. So one mistake I've made time and time again is I think looking at charts is great. But at the end of the day, while I think it's helpful, I'd have probably done a lot better with my journey through trading and been a lot more efficient if I would learn the videos first. It's just that simple. I'd say, gee, okay, Al says this could be a second leg trap. It looks strong. Maybe we'll get a measured move, but gee, I don't know. The range is, fairly big, and we close the gap here. We're breaking above these highs. I don't know. Maybe we'll go sideways. And look, but we had 3 legs. 1, 2, 3. Well, Al typically says when you get a breakout, we had, by the way, 3 legs. 1, 2, 3. And when I say we'll go above this high, we'll go above this high. And when I say we closed the gap, we closed this gap from here to here. We'll probably close this gap, even though we didn't. But we came really close. Coincidentally, normally when you get a breakout, you get a couple legs up. So strong breakout, expect a few legs. We got that. So anyways, all I'm saying is be mindful that you're not spending too much time looking at charts. I promise you, The person listening out there listening that just takes the next year or takes the next 6 months to a year, let's just say a year, because I think it's more fun and I think it's more daunting than people realize. The person out there listening that just took 1 year and all they did for a year was just study out videos, I can't imagine how well-rounded they would be 1 year from now. So, I mean, think about it. It's a pretty obvious answer. Typically, as people say, typically the obvious choice is usually the more difficult one. So, let's take that for a second. If you know between the choices of trading for a year, trading/studying for a year versus exclusively studying as hard as possible for a year, if you know one's significantly probably more difficult than the other, that's probably the one to do. So it's not a get rich quick. It's long, it's tiring. But at the end of the day, again, I want to go back to why I made this video. I made this video mainly for the person out there asking how to make Al Brooks studying easy. You don't make it easy. You make it easier by studying more, because you get more and more used to studying and you comprehend the information more and more. But don't get it mixed up. It's difficult, just as everything else is when it comes to trading. So I'm not trying to be pessimistic. I generally try to think of myself as an optimistic person, but I'm just giving you my complete, true feelings at this second in terms of trading. You have to study, bottom line. So, I've met, and I'll speak to this person. I've talked to plenty of people. I've chatted with plenty of people. I've messaged plenty of people. I've been in trading groups with many people. And there's the one common trait I noticed is everybody's all hoorah and excited excited to learn how to trade. And then all of a sudden there's less and less people excited to learn how to trade. But the ones that stay excited are the ones that are constantly studying now. And, I notice more and more people, it seems like, and it's kind of sad, they seem to learn a little bit and then they just start making their own websites. And for all I can assume, preparing to sell their own trading course, which I think is kind of fraudulent, if you ask me. I'm not pointing any fingers at any person in particular. It's just kind of, I've seen several people do it. But those are the same people that also mention how Al's videos or Al's trading room isn't helpful. Well, if Al's trading room isn't helpful, then you don't know you don't know enough. Bottom line. And that's another note. Study Al's trading room. But right now, what I would challenge you to do, I think Al's trading room is great, personally. I very much do. But right now, what I would challenge you to do is take the time to begin studying the videos. Everybody wants to make money. Everybody wants to be really successful at this. But at the end of the day, you got to learn it all at some point. So if you want to spend 5 years trying to learn it, or would you rather just learn it all in a year, get it over with? I'm also in making this video because it's January 10th, and for some of you it's January 11th and it's the morning, but it's January 10th, and the beautiful thing about it is you've got 346, something like that, days to study. So go for it. as always, I'm happy to answer questions. But the reality is, I just want to address questions like these from the get-go, and I want to address them now. You make Al's material easier to learn by studying. So you got to study. And if you're not studying and you're trying to figure all this out, you're kind of spinning your wheels. You're kind of wasting time. So I hope this video is helpful. You can email me. I'd prefer you not, to be honest. I mean, you can if you really want, but I may miss it. I would, this particular person sent me a message in Google Hangouts, and I wouldn't mind I would rather you message me in Google Hangouts than just an email, because I'm more likely to see it. I would mostly prefer if you email me through Al's brookspriceaction.com website. It's in the link below, as always. My username is bcwolf. That is, to keep it really simple, it's BCWOLFF. For those of you that need kind of it typed out, just so we're clear on what it is. Or if you really want, comment below. But again, I prefer conversations more or less to just be through Google Hangouts or through just a private message on Al's website. Thanks for watching.